welcome to the Saving Money Show with me, your host Sean. Today we're going through my portfolio. Before we do, I'm going to discuss a few things. For those of you long-time subscribers, you will have known I said a couple of months ago, a month ago, and as soon as Tesla actually hit their fourth quarter, the earnings, profitable earnings, I mentioned that doesn't automatically mean they're going to get into the S&P 500. I got a barrage of negative comments over that, how I don't know what I'm talking about, people unsubscribing on it, and one person going through unliking my comments. I had that over my Apple video as well, so I'm not here to say I told you so. Just before you start unsubscribing, before you start disliking my videos, at least give it a chance for these things to play out. You know, I do get things wrong, I admit that, and I do come out and I say I've got things wrong when I do, but please at least give me a chance to prove whether I'm right or wrong. Anyway, first off, I'm going to say big call out to Jeremy from Financial Education. I do respect him a lot. He does a lot for the community, and basically he signed up to the pledge to give a majority of his money to charity, and he's come out with a good thing. He's saying how he wants to teach his kids how to invest, not to just give them the money. And this is the reason why I'm teaching my children to invest from a young age. If you do not teach your children to invest, you may as well be buying them this, because we saw how Warren Buffett's kid he has spent his time investing. He gave his kids millions of dollars worth of Berkshire Hathaway shares. They've gone and spent it. Now, it would have been better off spending a few weeks, months, teaching them how to invest how he does, and then giving them the shares. But that's the way the cookie crumbles. You should also have what I call a barbell portfolio. You should, and I've spoke about this before, you should have a range of growth and value stocks and a few dividend stocks as well. It should be a mix. You shouldn't be in only one type. Now, this is going to be me come Monday/Tuesday. Oh, sorry, wrong one. It's going to be me come Monday/Tuesday for the US stock, because of course Monday for Labor Day the US market is closed, and we are going through my portfolio backwards this time. So let's head into it. And don't forget to hit that lovely like button, almost as lovely as me. Helps with the YouTube algorithm and getting the video out to more people. And don't forget to hit that subscribe button if you haven't already. Become part of the Saving Money Show family. We give each other hints and tips and updates about stocks and shares we talk about on the show. As well as that, you can ask me to look into any share you want, and I don't charge a Discord fee or ask for a Patreon. All I do ask is for you to comment in the box below and hit the like button. Even if you disagree with me, especially if you disagree with me, I like a debate. and if I do something wrong, I want you to call me on it so I can improve the channel. And why not check out the links in the description below? There's lots of others. I've used each one of them myself. I wouldn't give you links if I haven't checked them out myself. If you're looking for a free trading platform which should trade your stocks and shares, you know, you can get a free share worth up to £200 for signing up and depositing a small amount. A free trade only requires a £1 deposit. The others require £100 or dollars, depending on which one you go for. Stake has over 3,500 US stocks on their books, which is the biggest one outside of the US. Whereas Trading 212 is one of the best and easiest platforms to use. But as I said, I use all three. Anyway, on with the show. Now, Express Bar, I did a video about this. They do all the massages and therapies at the airports, and they have suffered obviously, and I think these will come back. The airports have opened up, and they're opening up more and more. They're getting more and more passengers. I think this will start to do well. Not only that, they are having the COVID tests on them. There are certain countries which require you to have a registered test done within a limited time period before you fly. One or two European countries as well. So I think if you're flying to one of these countries, then you will, if you're flying to one of these countries, then this will do well for you. It's going to take a bit of a while to come back, but it could be a good runner. Of course it could end up being a dead duck, but it's a speculative play. Now, Xpeng, I'm not really a fan of. They stole the source code from Tesla, and it's obvious they did. But getting justice from China is difficult, but they're backed from by Tencent, which means that it's going to be pushed hard. And China, with the things going on with the Chinese government, you know, it's a flip of the coin whether it's going to be a success or not, but chances are one of two things will happen. Either Tesla will be successful in this court case against them, or it will be a success because it will work. It's got Tesla's designs and source code. They will use the excuse that Tesla put all these designs out in the public forum for people to use. And I'm down on my position, yes, but there's no point in me just talking about when I'm up on my position. Yeah, I say when I'm down on my position as well. Workhorse. Now, how I love you, Workhorse. Yeah, I love this meme. I do love the older stock market memes. Now, I got in at $8. Oh, gee. I know someone who got in at $2. Can you imagine that? They must be loving themselves. Now, I got in at $2, and when it hit 20.5, I didn't quite time it at the top, but near enough, 20.5, I saw it was bubbling. It was becoming a bubble, going up too quick, and as Spaqs do, they came back down again. So I sold out of all my initial investment, just keeping 12 shares. So I had profit and 12 shares left, and I moved that initial investment into other Spaq stocks, and that's how, if you've seen my videos, that's how I do it. Now, since then I have the other 45 shares, and then the 12 shares were going to be, sorry, not 12, sorry, 18 shares, and then the other shares were going to be house money. I was just going to let it run, and then basically it dropped again. It was going up, going sideways, and back here I bought in again. Now, and I put in with the profit that I made from when it went to $20. Now, and basically, of course, all this with the USPS contract was coming along. I was using the rest of the money for other things, making money with other thing, and then it suddenly became apparent they're going to get either the USPS contract or the rider contract, and I bought back in. You know, it's a certainty at this point with everything that's going on. They're going to get a huge contract. It's either a rider one or a USPS one. Now, if they don't get the USPS one, they'll go back down to $8. But if they don't get the USPS one, and they'll be worth about $13. So they'll go down to $8, and then they'll consolidate around $13. If they don't get the USPS one, and then they get the rider one, you see where I'm going with this? Now, all the analysts are saying it's a buy, and it's worth $25. Not that I take analysts' expectations in, do my own analysis, but you know, it's well worth it at the moment. Of course, the average price has taken the $8 that I already originally had in there, and it's brought it up to $14.89. This is one stock I think you should get in before it goes to $25, before they come out, before they announce the news. Anyway, and this is what the Workhorse chart looks like. Anyway, on to the next one. Wkhs hologram. I spoke about this a couple of times. Jack Ma used it to give his presentation during the lockdown. It has a few new contracts, one with Google, and I do think this will come back. It's prone to spikes. You will see her. It's the type of company that has low debt to assets, good profit margin, and I think it's one of those that could make out of 5G, but of course it's one of those that could easily just go bankrupt, you know, eat up all this cash. Virgin Galactic. Now, all these shares are profit. I've got some shares in another portfolio as well. As I said before, I have up to 5 portfolios. I don't understand people who say they want to earn £1 million or dollars by the time of a certain age and have only one portfolio, when it's as if they don't seem to realise they're only insured up to £85,000 or dollars with one portfolio. That's why I spread it around different portfolios. I have my main portfolio, the one I like best, and I use that. If I can't find shares in that, I use my other, check with my other ones, and then I find the cheapest way to buy the shares and I spread them around. It's a spec play, basically. Richard Branson is trying to get qualified as space, although technically it's not space what it's travelling to. It's had its run-ups, One debilitating thing was where they were supposed to show the cockpit and it ended up being a computer rendering. Now, just trying to be able to hire out white knight, a lot of agencies including NASA are interested. Problem there is the FAA will only allow, has only given experimental authorization for white knight, and that means it can only be used for the purpose which it's been given a license for. Wkhs. Now, I bought this when there was the biotech run up. Before the biotech run up, I sold out. I took huge profit. I wanted to keep one share in it as part of my profit, so I could see where the share price was going. You're limited by how many price alerts you can have, and this way I don't have to bother with price alerts. I can just see it in my portfolio. I've done that with a couple of them. Tortoise acquisition, SHLL, otherwise known as Hylian, whatever you want to call it. We all know how good this is. Now, I bought into this at $12, and I don't know why it's not showing here. I bought in at $12, and I sold out at 24, and I thought I missed out. There was a run up. Now, this was in my ISA. It came back down to $17, and I worked out how half my profit would be 12 shares, half my profit would be profit. That's the way I work. I keep half of it in profit, half of it in shares, and that's what I've got. Now, if it drops again post merger, which I expect it to, all Spaqs tend to, I will pick up more. I'm waiting until the merger, and basically the week of the merger should have a run up, and then I'll think what to do. But at the end of the day, I can leave the shares there. It's playing with house money, and I am actually making $7 a share and more. That's the way I like to see it. This one I'm down on. I went in heavy. This company, I think it's an amazing company, and people just don't seem to have it on their radar. I don't know whether I'm just so far ahead or people are seeing something I'm not. Now, it has a lot of debt, yes, but this was last year. Same with net income, but they have trimmed that. Now, this company is a company that, I forgot about, sorry about that. I forgot to do the fundamental analysis of Tortoise acquisition, sorry. But I'll do that now. We're running out of time anyway. We'll deal with Tanzania. Life Sciences. Now this company, during lockdown, has a low flow, only has 12 staff, and what it did was during March, April time, when everything had dropped, instead of going and trying to shore up its balance sheet, what it's done is it's gone out and acquired a company, biotech company, and because it's done that to add its products to its own products, because it's done that, it's fast tracked. See, it's received 4 US patents recently, including one for COVID. Now, the balance sheet doesn't look good, I agree, but you've got to think about its pipeline. Now, it's got 6 million in liabilities and it's 2 million in assets, but I do not think, but again, this is last year, Yahoo Finance has not updated this. I do think that this is a good one. I did a whole video on it, I'm not going to spend too long. It has Mulab and another one, and it can be used, they say, for oncology, for cancer, because it can be used for more than one type of cancer. Of course, you've got the COVID, you've got the respiratory diseases, and it's got T-cell response. And if you don't know, T-cell response we use for autoimmune, can be even be tweaked for diabetes type 1 if they want to go down that route. Now, they have these drugs can be tweaked for so many different things. I mean, this is a kind of thing that has so many opportunities, in my opinion. You know, I'm £300 down. I don't care. You know, because I think there's a lot to it. Therapeutics acquisition is one where it's a share where it's profit. Okay, Tesla. I've been trading Tesla, as you know, and I've made a lot of money from that. Tailored Brands, it's all profit. Won't spend long. It's only 90 pence. But if you go there, you know, if it comes back to pre-Rona, it'll be 20 quid. Spotify, I'm down, but I do think Spotify's at its turning point. It's Joe Rogan. Once they get the numbers in for Joe Rogan, people will be piling in. It's signing up people left, right and centre. It's talking about doing audio books. It's doing audio books as well, which will be huge for it. And it's talking about a few other things as well. Now, I sold my Snap when I broke even. Now, I do want to go back into Snap because I do think next quarter Snap will do incredibly well. I do have faith in Snap. SPI Energy, I did this because I do think Tesla will end up tying up with SPI Energy. And Spartan Energy, I'm not a fan of the company. I think they're one of these who are going to fly or die. It's their history that I'm not a fan of. These 2 shares are profit. Just left them there. Same with Schultz. Their profit. I may sell them if it comes back to even. Sandstone Gold. you'll know that from my gold video. That is one that should, towards the end of the year or towards halfway through next year, should fly, and that's the profit basically. It did have a run up, and I took out my initial investment, and I'm thinking if it drops any more, if it drops to 10%, I'll go back in. Now Rocket, this is a company where I took my initial investment out, and when it went to 30, and it's dropped again, and I'm thinking of going back in. Now when they had their earnings call, remember they're a young company when it comes to these public companies, and I think they're agreeing with their earnings call, and they've done it more harm than good. I think they should be a $45 stock. I think they will either do more M&A or do a dividend by the end of the year, beginning of next year. And they are being a bit cautious with things like people will end up like stop paying their mortgages, and I don't think they will. They've done all their checks and that, and with the rising housing prices, people, once the protections are gone by the government, and the Fed has said how people in debt are going to be the worst hit, companies and people, over the next 5 years, I think, so that gives a clue that they are going to remove those protections. I think those people will sell their homes and downgrade rather than lose their home completely just to make their mortgage payments, because it's not like the housing crisis before where the houses are crashing, prices are crashing. House prices are going up, so they can afford to sell their house, get the money for the mortgage, and buy a smaller property and still have a house. Origenics, this is profit, and Wkhs is profit. That's BurgerFi. I like to look at the burgers and what they're doing to change. I did a video on them. They submitted a form to SEC so they can acquire more companies and chains, but they haven't yet. The problem with BurgerFi is a lot of people are not in restaurants unless they have a clean balance sheet, a great balance sheet. On top of that, customer service is not meant to be that good, but the burgers are meant to be amazing. One Stop Systems, this is pure profit. Neo, profit again, the 10 shares, and I'm waiting for an entry point. But to tell the truth, I may just go in again. Netfin acquisition. Now, to tell the truth, I may just go back in or sell. I'm not sure yet. I haven't made the decision. I think a lot of people do not understand the company is merging with, and that's the reason why, but I do like the company. Microsoft, Mr. Softy, this is a company you buy and hold forever, and if it rarely drops, and if it drops any further, I will be picking up more. And I picked it up at 188 in my ISA. I sold it when it was at 225, and because I was moving it to here, and then there was what did I do there? Then there was I had something going on. I couldn't buy it straight away, but I usually don't buy it straight away anyway. And then I bought it down at 250, 214. Lemonade, I did a video on this when it was $90 a share. I said stay clear of it, it's not worth it. I've done a whole review where I went through Lemonade's app and the problems with it. I said $50 to $60, you know, about $55. Anything over $55, you know, it's a stretch. I went in at $55 before it ran up. I sold out, and it came back, gone back in. Now when it hit $50, now I think it's a buy. But remember, it's a risky one because their balance sheet is terrible. Because they hold a lot of debt, and they're doing it rather than going profitable to get a bigger market share. I understand that, because if you go profitable, then you pay taxes. If you're not profitable, you don't pay taxes. But at the same time, you're giving money to charity. You shouldn't be giving money to charity if you're not profitable. And as I said, the Fed has warned against companies that have bad balance sheet. Nkla Holdings, this is all profit. Get Off Pharma, profit. Kensington Capital, I'm going to be selling this. I don't like the fact that they will not make a profit for 8 years. They won't make any income for 4 years. I don't care if Bill Gates is involved. Remember, he was involved with a toilet that produces drinking water. IZEA, profit. Invita, I like this, and I like IZEA. Invita. And remember, it's number 2 on the list of QQQ, ARK Invest. It's genome sequencing, and it's replaced Illumini in my portfolio. I've only got 2 shares, but once let's face it, Workhorse, I'm gonna put more shares in, buy more shares in Workhorse. Once this USPS deal is over with Workhorse, I'm going to pull some money out of that. Then I'm going to put it in here. That's the way. Invesco Mortgage Capital. It's a small position. And why is that? Because look at the price it was pre-Rona. It's this price because you can't foreclose at the moment. As I said, they're going to go, so no protections. They're paying a dividend, 2.56, PE ratio 1.51. They're going nowhere, but pretty soon they will come back. I'm not going to waste too much money in it because it could be a long time. No, but I'm collecting dividends meanwhile. Kcac, because the Senate are discussing to take MJ off the prohibited list. Guardian Health Sciences is all profit, and it's vision testing, diagnostics, medical foods, and Grow Generation, that not only has the MJ outlets, but it provides all the MJ companies with equipment. I said before, .com bubble, and during the 5G bubble, Applied Materials are the ones to buy because they will make no matter what company makes money, and this company will make money because it provides the materials. Foreign merger to Tattooed Chef. I believe in Tattooed Chef. This is all profit from the run up it had recently, and basically if it pulls back, I'll go back in. Now, Foresight Autonomous. Now this is one that I think will grow. I don't care that I'm down. It's only a tenner down. Ford Motor. I did a video on why I think Ford will go bankrupt in 2 years if they don't get involved in the EV market. What happens next? They come out with an EV. They come out with an EV car, a Mustang. They tie up with Intel for Mobileye, which NIO is using for autonomous driving, and I think that's a brilliant move on their part. On top of that, it's the USPS contract is between Ford and Workhorse. Now if Workhorse don't get it, Ford's getting it. It's as simple as that. I'm hedging my bets. 60 quid, no more. Foot Locker, I've done a video about it. You can see how much I've got in there. I'm not selling. I've got big faith in it. A retail company that has all the brands it does, and it has been profitable during this lockdown, and the majority of it is retail stores, not online. You know, I think this is just going to grow and grow. Flying Eagle acquisition, you know, should I have sold at the time? Yes. Am I going to sell now? No. I do think this is a company that can do well. Fastly, I am going to add more to my position. I want it to either dip more or go up. Either one is good for me. Facebook, I only have 2 shares. I sold out my others when it went up to 300. Now, what can I say? They're an amazing company. You can't really say anything else about them. You know, it's got a great balance sheet. They're laying fibre in Africa so more people can go on Facebook, because there's no new customers to get in in Europe or in America, so they have to do things like this. And not only that, because the earth, the way the ground is in Africa, they can't lay it in the ground, so they had to create a robot machine to go around the telephone wires above ground in Africa. So innovative. Dropbox, I've done a video on that, and if it drops to 10% below well paid, I will be picking it up. I'm considering picking it up at this price anyway. Just got to free up some cash. Diamond Peak it's all profit basically. Diamond Peak. CrowdStrike, I bought $100. It was in my ISA, and I sold during the run up, which you see was there. 144. Didn't get 144, over 144. I just got like 144, and then I came straight into here because it was earnings, and I knew they'd beat earnings. I didn't think it'd drop on it, but Kcac, I'm down on Kcac because I went into it because Kim Kardashian was signed up, and I thought it would be a good company. I thought it'd do what would happen with Gap, you know. Clean energy fuels is just profit. You know, they do alternative fuels like LNG, RNG, CNG, and maintenance. Now, with Hyliion, that would help. Cruisy. Now, this is just to keep an eye on stock. Now, I think it's a buy at this price. 80%. The revenue comes from Apple, which is, I have it in another portfolio, which is why I didn't go heavier. Now, they're going to lose out on the headphone jack with iPhone, but you've got to remember with these guys, Samsung tried to leave them and go with someone else, and they ended up coming crawling back. They're the best in the business, audio equipment, chips, and other things. They have a good relationship with Apple, and they get money for each iPhone sold, money for each accessory that gets sold. So if you don't want to buy Apple, but you want to make on the 5G, this is also one to go for. Churchill Capital Core, this is all profit. Check is profit. Catalyst Pharmaceuticals is profit. Canopy Growth, I bet you can guess why. Senate's decision again. Bushfield Minerals is all profit. They produce 3.5% of the global vanadium. Box Light, that's all profit. I've done videos about that before. Blink Charging. Now, we all know about Blink. I sold 11.50 and I was regretting it. And then it came out about the fake news and it came down. I bought back in at 7. Now, Wkhs profit. Berkshire Hathaway, I bought a 166 in my ISA. I bought about 12 shares and I sold at, not 221, at 219, and I came over, bought 6 in here, and then when I was doing a Tesla run up, I sold 3 more of them. And if this drops anymore, I will pick them up. If they drop to 200, I will pick them up. You know, it's easy money. Ashford Hospitality is profit. Let's go to the next ones. AG Therapeutics, AG Eagle, who are tied with Amazon. They reckon Amazon are going to profit. Achieve Life Sciences is profit. Right now, AFC Energy was from my hydrogen stocks. That's profit. One Life Healthcare, because it does the same thing as Livongo, and I think that could have a run up. Activision Blizzard. Now, I bought this, sold out when it was not 84, 86, and I was regretting it, thinking I did it for the Tesla run up because I could see Tesla was running up. I could see it was going to go parabolic, and I was putting so much money in there, and then I thought, oh, I missed out on this. I made more money there, obviously, but with Tesla. And then it dipped down again. I thought, should I put some money in it? I gone, no. I've got to carry on with my plan. And then it started going up again, Activision Blizzard. I thought, I've missed my chance. Come back down again, so I bought back in. That's 77.83. I'm glad I did. Now, of course, Alphabet. I bought this at £998 a share in my ISA. And only 2 shares, but then, as I said, I wanted to move my non-dividend paying stocks from my ISA to my invest account. So I sold here when it went to 1566 in my ISA, and I was going to invest some money in my invest account, and I bought back here 1520. Now we look at Google, who you are watching this video on. Now, to tell the truth, if I was going to buy more Google, it would be $1,200 or less, maybe $1,400 at stretch. But the thing is, them Google Maps have now got DeepMind AI assistance. You know, you've got about, you can stop this at any point and read it, or you can go online and look at it. One thing they don't say is how Google have recently also gone into Africa and released balloons that allow people to stream on Wi-Fi, new technology. Instagram, for Facebook, sorry, I forgot to mention this, has launched a separate Reels tab for user in India, so it can integrate tools in the future. So that's another plus for Facebook. Anyway, we're getting to the end of the video. I'm sure you're tired of seeing my voice. A lot of people are down recently. You can see a lot of my shares are down, but where I have different types of stocks, I have long term, I have growth, I have Spaq, stocks. In my other portfolio, I have more dividend stocks. You can see my return is £349, but if you go to my history, you'll see £514 since I started this. Now, I started this after my ISA, and this is more a case of I put the odd few quid every now and then in here. Let me know what you think of it. I do release my portfolios now and again. Don't forget to subscribe. Don't forget to hit the like button and comment in the box below. It really does help with the YouTube algorithm. I'll see you in the next video. Goodbye.